Thank you, Angel, and Heidi ho, everyone. Happy Thursday to you. Post FOMC day, or post Fed day, if you like. Did move the market a bit. There's no question about that. The Fed statement, as anticipated. The one thing that I have noted, however, is that a lot of those movements have, I won't say ceased, but they've been interrupted by a little bit of a response from the opposition, as it were, the people who didn't move, I guess, as a result of the statement. So I'm going to have a look at that in the not too distant future. I'm actually enjoying the retracements back on that move because I think I'll be looking to trade in the direction of the sentiment or the gut reaction, if you like, that took place after the Fed statement. In particular on the Aussie pairs, I was looking to get into the Aussie pairs long today, but I wanted a retracement on the move from the Fed, and sadly that didn't happen before the pretty stellar, if you like, unemployment figures came out from Australia. Interesting. I'm sure we'll have a chat about that a little bit later. In the meantime, let's go and see if the pound is going to be tradable today. Yeah, a little bit interesting, really. As those of you who were in here yesterday would realise, we were, Ash and I, that is, had a meeting on, was it Tuesday? I think it was Tuesday. And we were with the intent of updating the pound breakout journal, which we kind of did. It's not up to date, but we're getting there. And what we did notice is that we had been trading without filters, of course, just trading a breakout of the last three bars. What we did recognize, however, was that the premise of the trade is actually to break out of the range of the day so far. And if, for instance, this range here of that day, which was Tuesday, broken, we're looking to enter the market down here because that was the candle. Those were the three bars. Ridiculous. Just crazy to enter the market there after that move because the breakout has already occurred. So that's the theme upon which we are now looking to add our first filter. And we have done that. Now, what we do have to convince ourselves of is, has the range been broken today? And, you know, really, you've probably got to say it has, but we're back inside it now, which is kind of another thing that we need to look at. I'm prepared to say that I'm happy to place a long above that bar, and I'm happy to place a short below that bar if it weren't for the daily pivot. Now, we haven't added that filter yet, but I think it's a very good filter to add. Let me just check to see if we've got room here. 17.8 gives us 7. It's not half of the risk, which makes it very, very difficult. So I'm going to place the trade and monitor it closely. Again, this is play money that we're talking about and nothing substantial. So I will place the order, but with the caveat, of course, that perhaps this has been broken already, and maybe we shouldn't be doing that. But the fact that it's now back down here into the range kind of gives me a little bit more confidence that we will still catch that breakout if it is to occur. So let's place. Well, actually, that's the same bar, isn't it? We're trading the breakout of the bar. If we're trading the last three bars, which is 1, 2, 3, so we'll do that. The long and short will be vice versa. So let's place the long. 1.4001 will be the buy. I'll put it up here first. 1.4001. The stop loss will be the low of that bar, rounded down to the nearest pip, and that would be 1.3906. So a big range. 1.3906. And TP1 we can work out whilst we're here, it'll be half the risk. The risk is 95 pips, so we'll go with 48 pips. So the first take profit will be at 1.4049. We can put that in. The second take profit will be double the risk, which will be 190 pips. What did you say, 95, didn't I? Yep. 190 pips onto that will be 1.4191. And there you have the long order. The short order, which I best place just in case it does trigger. Anyone stay up to get the breakout trade on the FOMC statement? I didn't. And if you did trade it, you shouldn't have. So I'll go through that a little bit later. 1.3906. 1.3906 and 1.4001. Okay, so the shorts in the market. Now we still won't have room before, what's our TP1? 1.4049. What? No, that's not right. I haven't set the TP1 for that, have I? I thought I did. Oh, that's the long. Okay, sorry. The short's the one we need to work out. So the short, let's work that out. Selling at 1.3906. And the stop loss is 1.4001. TP1, therefore, will be 40, or was it 95? So it'll be 47 pips. What did I say before? I don't know. 47 off there will be 1.93906. 47 off there will be 1.3859. That will be TP1. Not supposed to be there, goose. Sell 1.3906. 1.39. What did I say? Oh dear, terrible, isn't it? Stop loss is a 1.4001. 47 pips will be 1.3859 for TP1. And TP2 will be 190 pips from there. Now I'm testing myself. So that'll be 1.3716, I believe, if my maths are correct. Okay, now I think I better check this. 95, 47 pips. Okay, so that should be 54, 1.4054. Sorry about that. I'm sure you're all checking my maths in the background. Probably not, hey? Righto, so we've placed the short. We need to place the long. It's a buy stop. It's at 1.4001. And the stop loss is at 1.3. Sorry, that is wrong. 3.8. What do we place? We placed the sell order. Oh dear. It's terrible getting old, you know. So we placed the sell, we haven't placed the long. Right, okay. Buy stop 1.4001 is correct. Stop loss 1.3906. Thank God it was nowhere near entry, eh? We'd be here forever. Righto, again, those of you here for the first time, welcome aboard, number one. Number two, this order that I've got in the market is, as it says here, an OCO trade, which means that it is one cancels the other. We're placing a long and a short at the same time. Today, we're trading one candle only. That's this big bar here. And the reason that we're doing that is because we're trading the breakout, basically, of the range of the last three bars. Now, what we've recognized is that really we should be trading the range of the entire day rather than the last three bars, because sometimes the last three bars have indeed already broken out of the range of the day. So that is the case here, but it's also come back into the range of the day. So I'm of the opinion that we should trial this to see if it actually works. So for that reason, you need to be putting very scant funds into this particular scenario until we have proven that it is a consistent winning formula. So they are your parameters for the day, and that is what we will be following until we get a result. I think I've got everything in place. The only thing I haven't done is put the TP levels on there for you. TP1 for the buy is 1.4054. My goodness. It's halfway to the heavens. Right about there-ish. There we go. That's close. TP2, if we get up to there, I'd be stunned, but 1.4191. Still going. There-ish. Okay, for the short, TP1 is at 1.3859, which is there, and TP2, I'll get rid of this, is at 1.3716, which is about there-ish. Closet enough. Righto, so we'll come back and monitor that if and when we are triggered into the trade. Now, let's go to the euro-dollar breakout trade, which is, of course, the FOMC breakout. I seem to have a few questions here. I better have a look. Putting Fibbo on the last lowest. Hi, Lewis. How you doing? Last lowest to lowest. The last lowest to last highest. Yep. Price actually ranged between 28.2 and 61.8%. The last time it touches 28.2, it came 160 pips down. Nice. Hi, Jaira. How are you? Lewis, you might come on and have a little. You want to come on a little bit later and have a chat about that, if you've got the ability so to do and the inclination so to do. What I'm getting messages all over the place here. Stand by. Great, mate. Great. That'd be fantastic. Hi, sweet. So my thing today is having a look back at what happened overnight, and I was really sweating on the Aussie pairs this morning to retrace, but they did not. Yet they are, or now have come back to what I would perceive to be, I suppose, the level that the market reacted to as a result of FOMC. So you can see exactly that. That's exactly what's happened. What does that mean? I'm not sure, to be fair, but you know, if I use logic here, it means to me that there was a predetermined level, and that, of course, was the previous high, and the reaction to the FOMC statement. You know, not coincidentally, these are not coincidences, right? This happens all the time.
Sorry to cut you off, mate. I've got a trade if you
Okay,
haven't
buddy.
got one. Okay. Hold on, let me just turn this off.
No, I haven't. I've got some ideas, but I haven't got a trade.
Okay, it's a NASDAQ short. Morning, Lewis. It is a NASDAQ short, and I don't, I haven't waited for really what would be a better point. It's not what I should do. It's a better point because what I'm doing is I'm going in really light, because I'm kind of I'm going to try and ease into this one. I'm going to buy it here. Sorry, I'm going to sell it here. I'm going to sell it here, and I'm going to sell it at the highs as well. It could be a bit early, and if you want to use better levels, then and it really does depend on your risk to reward. You know how you going to use this risk to reward. Why can't I get pivots up? Can't seem to find the pivots there. Let's see if I can do this. That'll do. So you can see that there's a daily. What was that?
I don't know, but I hope it wasn't music.
There's a daily pivot just here, so I'm going to sell again there. So I'm selling here and I'm selling here, and it's just really kind of edging into the position. I mean, if you just have a look at the Nasdaq, then we did talk about this yesterday, and the Nasdaq did fail at these levels here. This is a fundamental reason. You know, this is the reason I'm going short on this is because the fundamentals, and the fundamentals don't bode well. Yeah. Yield popping up to 1.7. Now that won't help gold and it won't help silver either. But what I'm doing with gold and silver is leaving the longs on those while I effectively hedge it out a little bit with the Nasdaq short. So, the thing with gold and silver is that they will, that certainly gold will be seen as an inflation hedge, and you can see, that there is going on now. What I've done with, but the problem with the inflation is that it's also being expressed through this 10-year yield. So if I just bring in the gold chart here, so you can see gold here. Now I've just re-entered. I've just taken another buy order with gold. Now it's not because I think gold's going up necessarily from this point, and I've got this order down here as well. So I've taken profit on one of them, and I'm trading again. So I'm really with this one. I'm trading the and just seeing what's going to happen with it. But I'm not too concerned. Now I haven't put a stop in place with this one because my stop is the hedge with the Nasdaq. So if gold is to come down because of those bond yields, so will the Nasdaq. If gold pops up, the Nasdaq won't necessarily do that because of the inflation story. So it's quite a nice balance between the two in some respects. You know, I quite like this as a potential hedge. So it's effectively long gold, short Nasdaq as a partnership. But you could take them separately, and if you're going to take them separately, in my opinion, much better to go short Nasdaq than long gold, because I'm not sure how those bond yields are gonna play out for the for gold. But you can see with the Nasdaq, we do have a reversal pattern. So we do have this this thing going on. Yes, there is an inverted head and shoulders here that we can see on the 4 hour, but even with that inverted head and shoulders, we haven't got down to the right shoulder. So even if we aim for that, we could be in pretty good shape. Certainly if you go in light enough, you can give yourself some room. So if you are going to be putting stops on, if you can get this second position, the obvious place for the stops are going to be on the neckline, and you're going to need to use that upper end for the neckline. So above this area somewhere, give it some room. And
Hello, that was interesting. I've got a funny feeling that Ash has crashed. I hope you guys can hear me. I look to be in the room, so I will take over until such times as Ash comes back. But I hope you got all the information that he had to share then, just in case he does not. Screen. Okay, can do. I was having a little chit chat about the euro dollar breakout. I was about to talk about that. A couple of things happened, actually. I don't know, Jairo, what happened. I think Ash just crashed. I hope you guys can hear me still. So with the breakout trade, we did suggest yesterday that this would be a good idea because I felt that the Fed would make an announcement that was meaningful. In my humble opinion, they did that. Not least was it wasn't even an inference. It was a statement that, look, and don't get me wrong, I've only read the headlines. I haven't read the statement. So I'm probably speaking a little bit out of school here. The headlines I read suggested that the Fed stated, or Powell stated, that there was no interest rate rises likely through 2023, meaning my mind says, okay, that's 2024 before they have an interest rate increase in their mind as a profit-seeking exercise. Not profit, profit, P-R-O-P-H-E-T is what I was meant to say, not P-R-O-F-I-T. As a foreseeing central banker. Of course, that changes with different circumstances, and it changes day to day, week to week, month to month. So, reading what he's saying reading into what he said, the intent is there not to raise interest rates, and therefore they don't see inflation being an issue. I wouldn't have thought. Anyway, all of that said, the result for me was a very clear gut reaction, which went to a very predetermined level. So what to do now is, okay, wait for retracement, thinking that that gut reaction was accurate, and go from there. I've got that opinion because I don't really see how the dollar rallies on the back of that statement, unless there's something that I haven't read that hasn't hit the headlines. And I'm hopeful that Ash can can fix me up there. Hang on, he's chatting to me in the background, I think. Maybe not. No, that's something else going on. I think he's probably crashed. So what I was contemplating is take the move, wait for the retracement, and go with the move. In particular, on something that's had extra fuel added to the fire, and that would be the Australian dollar. Why? Well, let me show you why. If you haven't been up to date with the news today, the Aussie job numbers or unemployment figures that came out today were quite astounding. And those are they. Employment change, which isn't really the headline act. The unemployment rate is the headline act. And it fell way below. Half a percentage point is quite substantial in terms of the unemployment rate. So, I beg your pardon. So there's in my mind, there's room for the Aussie to rally on the back of that. And so it did. And I can't see any reason from a fundamental point of view why the Australian dollar versus the US dollar shouldn't be very, very strong in the next little bit, if not today. That's got to be my premise. And if I look at other currencies that haven't had great news, Canada didn't have great news, although if oil continues to rally, Canada is on the back of that. Kiwi didn't have great news on their GDP figure, but everything's rosy for the Aussie. So I've got to be thinking Aussie US dollar, I'm bullish. I've got to be thinking Aussie Kiwi, I'm bullish. And I've got to be thinking Aussie CAD. It's a bit dodgy, Aussie CAD, because CAD's so strong. But certainly Aussie Kiwi and Aussie dollar, I'll be going into this session with that in the back of my mind as probably the most favored pairs that I would like to trade. On that premise, So let's take a quick look at that and see how we can A, validate it from a chart point of view, and or B, trade it. Probably B is the better of the two. So let's look at Aussie US dollar to start with. I've got an issue, of course. There are always issues. There's nothing that's absolutely crystal clear. And if it is, then something's generally not right. So what I see here is an absolute retest of that 78 area, which is exactly where we are. And the difficulty that the Aussie is having getting above that level. I think that's great because it does give us that retracement leg that we're looking for in order to get into the long. The problem, of course, with that is we haven't come far enough. The daily pivot and the monthly pivot are absolute magnets for me. And I would absolutely love to see the price get back down here to give us a nice launch pad for the next leg long. On the shorter time frames, it's pretty clear that the daily pivot is untested. Now, I will add, when the market reacts and reacts strongly, it is not unreasonable to, I won't say ignore the numbers that are ever present on daily pivot tests, but it is sometimes wise to, should I say overlook? No, I shouldn't say overlook. You can't ignore it. It's there, right? It's there like a big glowing beacon, an untested daily pivot. And we know the numbers that are associated with daily pivot tests. But when we do either reverse or have a major fundamental announcement, oftentimes you'll find that the daily pivot is ignored, and we need to take that into consideration as well. So I'm more than willing to trade this long without a daily pivot test today. Am I in love with the idea? No, but I am willing to do so. It will be at reduced risk, but I'm willing to take that on board. Of course, I need to have a setup as well. And at this point in time, I do not. What I would absolutely love to see, and this would really get me excited, is if price were to come below this level, if it tested the daily pivot, all the better, then got back above that little trade line, retested it, and bingo, away we go. We can have another crack at that 80-cent mark and see how we travel. I'll certainly be looking to take on those highs. So that's Aussie US dollar. The other one I mentioned was Aussie Kiwi. Now, Aussie Kiwi is a little bit tough because we're bang on the top of that range. But again, the things that we have to look at are daily pivot tested? No. So context, we're at the top of the range, maybe coming back off it. If we get a lower high here, then we've probably got to consider a short to get long. So this one's not as easy as Aussie US dollar, but I'm still there. Again, if we don't get, if we get a setup prior to a daily pivot test, again, I'd be willing to trade it. This one far more dangerous because it's at the top of the range, but certainly willing to trade it on the back of what I just said. We've had bad news from the Kiwi. We've had bad news from the US dollar. We've had great news from the Aussie dollar. I think any retracement on both of those pairs is a buy. Back with us, mate.
Sorry, mate. I don't know where we got to.
Yeah, you got to halfway through telling us about the NASDAQ trade.
Okay. I don't know where halfway was.
Exact point. Well, I don't know. It's actually difficult for me to say it was halfway because I didn't know how far you had to go.
Oh well. Let me go into did I go into the time aspect of it?
Say again.
Did I go into the volumes? Did you hear the volume stuff?
No, I don't believe so.
Okay.
Sorry, I should have answered Jaira as well before we go. There were two things he was asking. One was going back a bit, Dollar Sing. Now, Dollar Sing, I actually didn't get in the trade. There's the trade there that we set yesterday, and bloody Nora, it missed TP2 by 2.5 pips. Wouldn't you know it, eh? But what I did was I set an expiry prior to the announcement itself. So if I'm not in the trade by the time the announcement was made, didn't want to be in it because it could have gone either way. As it turns out, perfect. Well, almost perfect. It got TP1, but it missed TP2 by a freckle. Same applies, Jaira, in my humble opinion. This is an excellent opportunity to get short because this has got to mean something. The one thing that's an issue, of course, is that we didn't break that level, and it's quite amazing, not surprising, but well, is that even possible? It doesn't surprise me that all of those big moves, not all of those big moves, a lot of those big moves went, and that's where I was with the euro, went to an exact support or resistance level and no further. Very interesting. So price wasn't willing to go through those levels as a reaction to the FOMC statement. But I think we can have another crack at it. So I'm with you. If you're out of the trade now or didn't get into it in the first place, as I didn't, and I better get rid of that, then I'm watching and waiting here for an opportunity to go short. I'd love to be in it up here so that we can take profit before that low, however. So that was one, top of the H1 range. This one here, or this one, you don't want to go back there, I don't think. Yeah, look, it's not easy to get in because you've had now a big buyer bar that's taken out the high of the day, and you're now getting a retest, maybe even a double cross of the daily pivot. What would be nice, I've got to say, is if we could come back to the breakout area, which we did really, I suppose, depends on where you consider that to be, and then got some form of a false break. Even a false break of the daily pivot, I'd be happy with. So, if we a little bit of consolidation here back underneath, then retest the daily pivot from below, I think that would be the chance that I would relish to go short. So that's dollar Sing. The other one was Nasdaq. That's for you, Ash. High probability for euro dollar to retrace the weekly pivot or below it to go up further. It's really really tough for me to want to trade euro dollar long, as I've said all week, but the technicals are telling me exactly that I should be trading euro dollar long, and I think you're pretty much spot on the money again, mate. I'd be happy with the daily pivot if I got a setup, but the weekly pivot would also be pretty cool. The reason I wouldn't like the weekly pivot so much is because it comes back into that range, I guess. But I'm kind of ready to go here now if we can find an entry. And at the moment, H1 or M30 doesn't give me that. Obviously, the preference, as always, is to trade off a support level. And that support level is going to take a long time to play out, in particular if it is daily pivot and trade line confluence. That level there and the daily pivot is pretty interesting. If this is a bull bar that closes up here somewhere, you'd be thinking that the market will like that, and well, traders will like that, and they'll look to push that higher. I don't see an entry there for me, unfortunately, at this point. So I've got to get it down further. Weekly pivot would be perfect, mate. I think that would set up. If we got below that, back above it and retested it, happy days. So there you go. That's the way I see it. Yeah, look, I don't know that the dollar is strengthening. The dollar is strengthening today. It's having a little bit of a rally. I think that's probably a lot to do with maybe the word I'm looking for escapes me, but it's kind of a dampener or a tempering effect on the reaction to the FOMC statement. I don't see how the dollar can rally, frankly, on the back of that statement, or certainly the headlines that I read. And I haven't read the full statement, I must admit. But that's kind of why I'm Aussie dollar centric rather than euro dollar centric, because the Aussies had fantastic news today and the dollar hasn't. So on that basis, I've got to be a bull Aussie dollar. Euro dollar, not so much. But yeah, dollar index, I can't see how that's sustainable in the next few days. We've got to have a reaction to what if a central banker says we're not going to raise interest rates for 3 years, I've got to listen to that, and the market should as well, given time. I think you'll see a weaker US dollar. That's my opinion. See how we go. Sorry, Ash, that was a bit longer than I anticipated.
Oh, not a problem, mate. Not a problem at all. So we have got Bank of England later on, obviously.
Yeah, that
really
too.
That's now we need to watch out for. Now let me just show you guys this. If I can bring it in. No, that's not up to date. What is it? Well, okay, maybe I'll get it on here instead. Oh, I'll get lost. Oh, yeah. Okay. Right, I'm going to see if I can find what I need here. I might not be able to. Here we go. Yeah, here we go. This is what we need. Okay, so let me share my screen. Everything's all over the place right now. There we go. Right. So NASDAQ. Yeah. So now I was explaining about the NASDAQ. You know, I am looking at short. We're going to look at this volume in a moment. I'm looking for shorts in the NASDAQ. Now we know about the pattern. And the pattern is this head and shoulders pattern that's going on. It's even starting to look like a diamond. And the diamond is very rare in markets, but extremely negative. And let me draw it on this instead. It is very, very negative, and if we break down the diamond, the move can be pretty vicious. So let's just talk technicals to start with, and then we will talk about reasons why I think this NASDAQ is breaking down.
I just want to add one thing.
Yeah.
Sorry, with the euro dollar. I would be prepared if the current 1 hour bar closes on or around where it is currently to take a short to the weekly pivot. Very low stake, but I think that's not a bad idea. Cheers, mate.
No problem at all. Right, so euro dollar. So sorry, NASDAQ. Now we have this. Now this is a really negative pattern. It's called a diamond, and you can see the reason why, I'm sure. And it's going to come in maybe line 4 could be a bit better. And we will draw line 4 from this point instead, which is going to get us to about there. So you can see that this is our diamond pattern. Now the diamond pattern will be just like any other, where you're going to sort of like take your measured move from the top end of the diamond to the bottom end of the diamond. Now that already provides us with a pretty negative looking outlook, because that's potentially drags us down with the NASDAQ all the way down to this point here. Now that point there is 11,429. Now, if we're currently at 13 and we're going to drop down to 11,500, we're looking at a 10% plus drop, 10 to 12% drop in the NASDAQ. Now let's talk about the reasons why. So that's just one of the aspects that is suggesting that the NASDAQ's coming down to me. Now I've talked about different areas you can enter it on intraday, because you've got the daily pivot here. Did you hear that bit, mate? Did you get the daily pivot bit? I'm not exactly sure where we were, but you guys can check on your charts and see. So you should have the daily pivot around about 13,121. I'm taking a position here just in case it doesn't pop up to the daily pivot. Why am I so keen to get in right now? And the reason that I don't completely agree about the dollar, and I think the dollar is likely to strengthen at this particular juncture, is because of the 10-year yield. And this is a very, very dangerous price. Look at this 10-year yield, 1.71%. Now that is a dangerous looking price. We were down at before the FOMC, I think we were at 165. So we're up another 6 basis points on the 10-year yield. That is positive dollar. That's positive for the dollar, and that is negative for equities. And if you want me to go into explaining why it's negative for equities again, I'm quite happy to do so. But I'm pretty sure you guys understand that, or you may not have been in that show. So of course, ask me if you need to. Now, I'm taking it as a hedge, and I don't know if I covered that. I don't know if you guys heard that, but I'm taking it as a hedge because I'm long on gold. If the NASDAQ comes down, gold is coming down. But what I am saying is that the NASDAQ will probably fall greater than gold. If the NASDAQ comes down, gold could still go longer, but go higher because of inflation, you know, and the 10-year yield is expressing inflation. The problem is that because gold doesn't return anything on a yield, then the 10-year can really knock it for 6. So, you know, it does need to kind of it's better in an inflationary environment where that 10-year yield isn't so pronounced. But it's a bit of a hedge. So I've taken the NASDAQ as a short to hedge out the position with gold. And I'm sticking with along with gold, which means that the stops are, you know, in a way not as necessary because one should cancel the other. But there has to be an imaginary stop, because if the spread between the two gets too wide, I need to close the position. And that's just something that you know, I would have to I'd have to project. Now, if you need me to go through that in more detail, the spread and everything else, then shout. If at this stage it's a bit too confusing and you're not going to trade that way anyway, don't worry about it. If you understand it already, again, don't worry about it. Now let's talk about another aspect of the NASDAQ which could genuinely weaken the NASDAQ. So we talked about the dollar, we talked about that 10-year yield. We talked a little bit about inflation. We've talked about this diamond pattern. Now, this is another key aspect. Now, Gordon Scott has been mentioning this, and I think it's a fascinating look on the markets. And I don't know if you've ever heard this one, Jeff, but it makes complete and utter sense when somebody actually explains it, and it's brilliant. So, when you take out a position, when you take out a asset. When you buy an asset, you will pay tax when you sell the asset. Now, the tax is significantly diminished if you sell that asset 12 months after you buy it. So 12 months and a day after you buy it. Now, look at when we started the rally. Now, it's really important that we're looking at these volumes here, because it's the volume spike. Now, this is back in 2020, in March 2020. This was the big move to the downside with the NASDAQ. Now, I'm just going to blow this up a little bit here. You can see that the volume was still elevated here. If we sort of were to put a level over this area, you can see that the volume is mostly down way below. We get these little volume spikes, but there's a cluster here. Now, this cluster really was the time that people were getting back into the NASDAQ. That's when the buyers started to prop the NASDAQ back up again, and it sort of subsided around about middle of April time. Now, that means that this is the big day on March 23rd was the kind of the bottom, and then we had the March 24th. So really the last week in March, and look at where we are now. You know, now we're on the 18th, so we're on about a week or so away from the potential for, if people are getting a little bit scared about the moves in the stock market, the moves to the upside in the stock market, they can start taking profit without the fear that they are going to lose a big chunk of it in tax. So we might be, you know, this might be even a little bit early. We might see a little bit more of a pop to the upside with the NASDAQ. But the thing with it is that there is a reason to sell the NASDAQ, and the reason is the 10-year yield, because the 10-year yield popping to the upside starts to devalue those those growth stocks. And I won't be surprised at all to see Tesla again in a battle of buyers and sellers again today. We cannot see a 10-year yield popping towards that 2% target, and for the NASDAQ, the likes of Tesla survive. It's just not mathematically possible, because the valuations got so overblown, and because the 10-year yield pays such a huge aspect of that valuation metric. If the 10-year yield pops up, then by definition the valuation is has then become too elevated, and it means that the stock market will have to, or certain stocks will have to start coming to the downside. We'll have to start selling off. So we've got the time frame aspect, which is around about a week away. So we might see a bit of a drifting to start with, but we could see an almighty move if that 10-year yield pops up to 2%. So we might see a bit of profit taken here. We might start to see, because there were some people obviously that had bought the Nasdaq a week before. That there was buying and selling going on, right the way through that bottoming pattern. But the main sort of push was in the last week of March, that we can see that. Now, if that 10-year yield continues to pop to the upside and it gets to that 2% mark over the next week, I can only see the Nasdaq going one way, which is why I've sold it off way before the market has given me a technical picture to do so. Really, I mean, okay, the bigger technical picture is just sell it, but if you're trying to get to the minutiae of getting the absolute best price on the trade, it's not here. The best possible price on the trade, we're going to have to start bringing in our pivots, and we can see that there's a pivot here, which is why I put in another order there, and I'll put another order in there, and I'll put another order in at the high. So it's really important to go in quite light, obviously. But I've got in way earlier than I've got a technical area that I should be selling this off, and it's because I wonder whether the fear is going to start, because we just had the Fed out. And within a half a session, we've seen that bond yield just pop to the upside. Now that should strengthen the dollar, and we're starting to see that the dollar could be bottoming out here. I mean, look at that move in the dollar. That is a huge engulfing bar at the lows now, and also the dollar is at an area of potential support here. So the dollar's in a buy zone. We've got a bond yield which suggests that we should see some strength in the dollar. And then we get this, this move in equities to the downside, and this is where the dollar is starting to carve out. Now, if it starts going below that level, I wouldn't really want to be too interested in the dollar below 91. Maybe 90.50 or 90.75. Wouldn't want to be too interested there. But while the dollar's above this level and the bond yields are popping up, I think the Nasdaq is under pressure, and this is the reason that I'm currently short on the Nasdaq, and I'll continue to add to those short positions. I'm holding on to gold. I don't particularly like it anymore, but I'm holding on to gold because this is my hedge. Because if the bond yields pops down, the gold's going higher, and so is the Nasdaq. But and the Nasdaq will probably outperform this. But if they both come down, I would have thought the Nasdaq would probably come down harder. So this is the hedge against the long positions with gold. So there is one equation that we'll lose, and that's if the Nasdaq pops up. That will be a loss for me on the hedge, because gold probably won't go up quite as much. But if you see the Nasdaq popping down here, then the money will be in the bank for sure. I would suspect the Nasdaq's going to suffer the most. So hopefully that explains it as much as I could. Bitcoin we should get to as well. Now Bitcoin did have that move down yesterday that I was talking about. It was edging lower and lower and lower. Look what's happening now with Bitcoin. It's popped to the upside. Bond yields are starting to strengthen, and now look what's happening with Bitcoin. Now it's very difficult for me to make absolute correlations with why Bitcoin moves. Because I don't understand it anywhere near as deeply as somebody like Shukri. But what I do understand is what's going on behind the scenes with the financial picture after Jerome Powell. And what I also understand is a message from the markets that it does not like what is currently going on in this particular session. The Bitcoin does not like it. So if you are looking at asset classes that are likely to dump, and if we look at Bitcoin as well, let's look at that time frame correlation. When was it that Bitcoin really started to move to the upside? 2020. It was back here, wasn't it? Oh, here we go. Yeah, similar. Now, I don't know the tax implications of when people buy it, but it's an asset class. So it's similar, where you're seeing a pop to the upside. Now, if we bring in a look of what happened with the volume, that particular area, then what we can see is that the volumes were most elevated on this bar here, and that was on the 13th. So in a way, Bitcoin has already got the green light to go. And we saw elevated volumes right the way through here. That was the kind of last kind of like big volume spike was here, and that was in May. So it's suggesting to me that between now and May, Bitcoin could, if it's going to sell off, if it's going to have a sell-off, and not if it's going to sell off. I don't think Bitcoin's going bearish by any stretch, but if it's going to have a sell-off, then that does suggest that it could come in the next few months. If the Nasdaq's going to have a significant sell-off, it suggests that it's going to come in the next month. And it's the same with the S&P and all the others. When are people going to start taking the profit on the elevated move? Well, they're going to take profit. Firstly, I would have thought when the tax implications probably won't hurt them as much. And secondly, when the valuations that have been calculated actually don't make any sense anymore. And the 10-year yield is saying these valuations just don't make sense anymore. So that's the thesis there, mate. That's what I'm looking at.
Happy days, buddy. I'm going to offer just an alternate view of the dollar index.
Okay.
Just so we've got a bit of a Barney going on. I like a Barney.
Let's have a Barney.
Yeah. So that's not the dollar index. I'll have to drag it across. There's my my chart of the dollar index, and I've just added a few more lines there for effect, I suppose. Wouldn't normally do that. But what I see is a downtrend and a retracement. I see a false break of the top of this range here and here. I see a lower high based on that false break. And I see some resistance dead ahead. Yes, I see the dollar rallying right now. And I think today will probably tell a story. Like Ash said, if he gets below support, he doesn't want to know about the long. If I get above resistance, I don't want to know about the short either. And I think either can happen.
Mate, I think it's interesting because when I think of our skill set, there's no question that you are a much more accomplished technical analyst than I am. And I am looking at this on a fundamental basis, and then kind of looking at the technicals and going, actually, this supports my thesis. This can support my thesis. But you're absolutely right. If we start from the technical position, then I completely see that. And I haven't drawn any of those lines in, but I completely see what you were looking at there. And I suppose that's the thing. My starting position is off what I am seeing sort of in the background. And for that reason, I am long the dollar, and it would almost be a situation for me where I either wait for the technical setup to happen, or I ignore it completely. So at this stage, I can only think about the long because of what's happening behind the scenes.
I wonder if you had, I guess, a spreadsheet or even a ruled line down the US dollar index, and on one side you've got technicals, and on the other side you've got fundamentals, and split the fundamentals in half today, I suppose, because you've got one fundamental saying one thing and another fundamental saying another. So I don't think there's anything crystal clear here right now.
Well, I agree, and you know what's interesting about that particular what would be interesting about that particular methodology is that you could make an argument for either side fundamentally, and you can make an argument either side technically. So it would be a very difficult spreadsheet to probably populate, because you couldn't say that the technicals are saying this, because otherwise everybody would be on one side of the boat. If they all technical analysts would be on one side of the boat. And because the other thing with this, aside from anything else, it is a higher low. We are sort of like sitting at a higher low on the dollar index here on the daily.
On what chart? On the daily chart?
Yeah, on the one you're on.
Yeah.
I mean, if we think that that spike from the high on the 3rd of March and we're coming back,
that was a higher low.
yeah,
That's not a higher low. It is
because you're
based on
going
here
on,
and
yes,
here,
yes,
but it's a new low based on there.
because you're going on spikes.
Yes.
Yeah. You see, the closing price is.
I don't know. The closing price may be the same as well. I don't know how to read closing prices on this bloody thing. I need a driver's license. So the closing price there,
yeah,
there was a little gap down. What that
yeah.
was? Oh, that'd be the Fed, right? So this is today.
Yeah.
Yes. Okay.
Yeah. Yeah. So that suggests to me that we're still in. We haven't closed below that level,
Yep,
and until
fair
we
call.
do, yeah, it's a higher low. So yeah, I think you could go either way. I mean, what I have done, as I say, is I have hedged. And that's that to me.
I think that's really wise. I think that's a good idea.
Yeah, it appears to me to be the safest position. Long on gold, long on silver, and hedging out the risk with the Nasdaq.
Can't argue with that. That makes sense to me. This doesn't yet. It's not clear to me. It will be if we break above here, and as you say, on your trend line, which comes across here somewhere, if it breaks below that, then we've got a clearer picture than we have right now.
Yeah.
Lewis is a bull. Lewis is a dollar bull. There you go. You got a mate there.
Okay, thank you, Lewis.
And
good to have you on board.
And I'm Barney Rubble, not the purple dinosaur. Barney Rubble. Does everyone know Barney Rubble?
Yeah, I think we do know Barney Rubble. Yeah.
Yeah.
A bit of Barney Rubble.
Have you got any more, mate, or what?
No, sorry, mate. I was just in the background doing something else here with some of these positions.
All right, I might have a little flit around the grounds then, since we really haven't done that.
Yeah, let's do that.
What's the pound doing now? Look, I decided today that yes, we had broken the range, but we were back in the range. So I thought it was okay to take that position high and low on the same bar, and go short or long at the low and high. So kind of still in the range. That's why I thought we'd do what we'd do. And it looks like it might head towards the daily pivot. Nothing there yet. Euro dollar we've spoken about. Oh my God, Gyra. I said I'd wait for the 1 hour bar. It hit it on the 30. Bugger. There was your entry there.
Euro dollar. You were looking at a short there, were you?
Yeah.
Yeah.
Yeah. Only to get long though.
Only to get long, yeah.
Yeah. I want to come down to here, break this level, get back above it and retest it.
Oh, shoot.
But you too, eh?
Oh, no, I think I've just made a bit of an error.
So 11, 1.5 to 1.
Okay, no big deal.
Damn. Okay, that's on its way to where I want it to be, and then I'll look for long if we get that false break. The Aussie pairs I'm still waiting on. Gee, I'd love to see a daily pivot test here, I've got to say. And if that happens, I'll be all over this like a shark on a mackerel. We will see. I don't see anything else available. Big bearish engulfing bar. That's cool. Don't have a problem with it. Aussie Swissy. We weren't really talking about that earlier, but it's probably a reasonable option also, given the Swissy's a little bit weak. But again, I'd like to see it down here. If it doesn't get there, this is probably something that you might look at on a bigger time frame. H4 would be okay. Certainly wouldn't be looking to trade it on a smaller time frame because we're at DR2, don't want to know about it. Aussie Yen, same really. We have hit DR2. It's got to pull back for me to get interested. Aussie Kiwi is definitely above DR2, which again precludes me from taking an entry there. Would I be prepared, like euro dollar, to trade this short to get long? Maybe. Again, untested daily pivot. So I kind of get interested in that. We were looking at Kiwi Swiss earlier in the week, and we're looking primarily for a false break here. Kind of happened with that bar there, but we've since put in another high. Let me go to the bigger time frame here. Yeah, it's not giving me what I want to see. And again, I've got to see what I need to see, because this here is a great trade line, because we've had beautiful tests and nice frequency within those tests, nice little gaps, pull back away, come back to it. This time we haven't, right? Which tends to suggest that something different may happen, which means that we can consider a long here. But again, it's tough to go long right now because you're right on the top of the range. Bring me back to the pivots, then we might have another story. So what's tradable? We spoke about dollar Sing, and I would like to get back into that, because I didn't get into it in the first place. Again, I'm looking for that. Unlike most people right now, I'm of the opinion that the dollar will weaken further, and I'm just waiting for a nice little entry for that. It's not there right now. Pound yen, not really interested at the moment. Euro Kiwi in a range which makes it interesting. So let's have a better look at that. We've got to get back to the daily pivot, really, then put in a higher low for me to get interested. That can happen on any time frame. Nice little double bottom there. So, yep, daily pivot test, higher low, maybe at that level would be cool. We could go long, Euro Kiwi. Interestingly, not that keen on the euro, but like I said before, the charts are telling me that we're going to get a stronger euro for whatever reason. But that's what's happening. Same here. We're down pretty much to that support level, and we look like we might put in a little bit of rejection bar there. Again, daily pivot test, higher low. I'll be looking to trade that long. Kiwi yen is in a bad spot there right now. Not interested at the moment. Euro yen, same. Dollar CAD's interesting. The CAD has been so strong, hasn't it? Really has. It's hard to trade against it. And I'm not interested in trading the dollar long, so that rules that one out. Pound Kiwi, we're still in that trade. It has come back on us, but we have hit the bottom of that range as a result of the FOMC statement. I would be looking for a higher low here somewhere. Won't happen on the 4-hour charts, too ugly. Hourly. Break, retest, double cross of the daily pivot, maybe. Keep your eye on that one in the next, well, we'll be able to tell in the next minute or so. If I do see that close below the daily pivot, I would look to trade that long. We'll come back to it. And that's it. Pound hasn't triggered yet.
Oh, is the breakout? Was the breakout trade on today, mate?
Yeah, like I said before, you mightn't be listening. I was considering whether I'll put it back to normal. I was considering whether we had the breakout or not. And yeah. I determined that, okay, yes, we have broken out of the range of the day, but we've come straight back into it.
Yeah.
So I thought I might have another crack at it just for today. And the range is pretty much set. So I thought we might just have a crack at it today. So far, nothing, however.
Yeah, I think you're right, though. I would consider that still within it.
I think so.
Yeah.
Sorry, you go.
I was just going to say it's quite emotive, isn't it, that move? But because of FOMC and everything else, I think that's it looks kind of almost as it should in some respects. As you'd expect it to look.
Yeah. Yeah.
But it is within story.
That. Oh, what are we going to have a look at here? What did I say I'd trade? Wasn't there. Euro yen, no. Back here somewhere. No. Whew, came straight back, that euro dollar. I said I'd trade something if it's set up. What was it? Pound Aussie. No. It was a double cross to the daily pivot. Dollar Sing, no. Pound yen, no. Euro Kiwi, no. Euro pound, no. Kiwi yen, no. Well, I'll be. Pound Kiwi, that's what it was. It's a no. No, don't want to trade that bar. As I said, if it closed below the daily pivot, it would have been a yes, but it is a no from me. A couple of questions. Gyra. I have entered a euro dollar with a buy limit at 119.11. Okay, 119.11 is the bottom of that range, pretty close to it, I would imagine. Yep, bang on it. Interesting. Interesting. So I'll wait, Shira, for the false break and back here. I may not get it. You're in the position where you will get that if it does move. I like it. I don't trade that way, but I do like your intestinal fortitude. I'll put it that way. Where I enter Aussie long, it is showing a head and shoulders for short at H1. Yes, it is showing a head and shoulders, and that's also very interesting. And the reason I don't see a head and shoulders there formed, but I see the potential for it. But on the daily chart, I think you'll see a head and shoulders. Yes, you will. Left, head, right. But we also see head and shoulders all over the place at times, and they don't necessarily play out. In fact, they've got a very poor rate of success. But if you get them and play them right, you can still make money out of them. So for mine, we are at that level where it will be determined if this is going to win or fail or succeed as a head and shoulders. Because if this breaks to the high side now, I think it will take on that high almost crystal clear in my mind that will be the case. The issue, as I said earlier in the show, that I have right now is that the probability factor is that we'll get a daily pivot test at some stage today. But I'm again, as I said before, if the market goes nuts in a direction at any given time, the daily pivot will not be tested on that day. Case in point, right here. Didn't even look at it, So that happens, not invariably, but it happens when you get basically a fundamental move. And this is one of those. So I wouldn't place as much weight on a daily pivot test today as I would without the FOMC statement yesterday, if I can put it that way. So I would most definitely be willing to trade this long without a daily pivot test, but not on spec. I still need a setup. And right now it's not there. But I'm looking for it. I'm definitely looking for it because I'm an absolute bull this pair right now. Based more on, well, I take your point with the head and shoulders. And don't forget, earlier in the week, I was a bear this because of the chart patterns. We had a very very strong move to the downside, retest of that high, and it looked for all intents and purposes as though this was a lower high based on lower low, lower high, lower high, lower low, lower high. But that hasn't panned out so much right now. So it's a very interesting level without question. And I think a lot of the charts that we've looked at today are in this very precarious position.
They are, and actually, if you read it like that as well, the current bar would be a great bar to see by the end of the day, because you've got it after a significant event of the FOMC, and we've talked about the dollar and the potential strengthening of the dollar. That you've got a pattern there. If that bar ends up like it is today, then that would look like a pretty good signal for some downside.
I agree with that, because to my mind, if the market, and so far the UK market hasn't done it, hasn't said, well, okay, that news out of Australia today was magnificent. The news out of the US, well, we've worked out a little balance there in the Fed statement versus the bonds. So yeah, the UK market hasn't suggested that what I'm saying is right just yet anyway. So maybe we get to the UK session, the US session, and as you say, Ash, if they don't go long from here, then something else is happening, and I'll mark you right, and I'll be a seller tomorrow probably.
Yeah.
So I think I've answered all the questions, have I not?
Yeah, I mean the only other one I'd say is short on euro pound. Be careful with the euro, anything with the pound before the Bank of England.
Aussie long is just showing head and shoulders on H1. Yeah, I don't see the head and shoulders on H1. I can see the potential for it, but I can't see it right now. I can see a big bearish engulfing bar. There's no question about that one. I can see an untested daily pivot. So again, I'd be willing to, if it's set up nicely, I'd be willing to trade it short to go long. Wouldn't have a problem with that. But it'd be low risk for sure. Mate, that's about me, I think.
Yeah, sounds good, mate. Sounds good. I think that's a decent session. Well, I will hang around and speak to you as soon as you're ready.
Yep. I'll probably go and grab a Pinot Grigio, I think.
Go and get yourself a Pinot Grigio. I'll go and get a drink as well, and I'll meet you back imminently.
Hang on, you've got a question from Dale.
Any ideas on oil? Yeah, do you know the statement yesterday? And I can't remember the acronym. Sorry, the I can't remember the people it was, but the body, the oil body. I can't remember their name, but the people that kind of regulate this stuff.
Not OPEC.
Not OPEC, no. IEA or something like that. It's a 3-letter thing. I can't remember what they're called now. I suppose O is probably in there somewhere. Maybe the energy is where the E comes in. They were basically saying that the super cycle for oil is very, very unlikely. And they made a pretty good case for it as well. You know, that there's still quite a lot of oil sloshing around the system. You know, there's enough supply out there really to kind of get us through the next phase. So unlikely to see a big super cycle in oil. So if we consider that, then it would suggest that that oil is probably a little bit toppy. The only thing is that the trend is still very much intact, and while the trend is intact, then you probably have to continue to play oil long, and wait for the signal that it is starting to break down. I'm just going to show you my screen here.
I'll just go and bring it up for you. You go ahead, mate.
Yeah, so this is the chart of oil. You can't fight this. You really can't fight this. I think the one thing I would say is that there's probably enough speculation right now that that the move in oil is potentially done, and getting in short until this is broken down, I think would be unwise because of the technical picture, and it might even be that all you're really looking to do is get it down to the $60 a barrel level. But I think that $60 a barrel level probably near there will I think it could be seen. Just because there's a little bit of negativity. Now, I wish I could remember that body, but it is a governing body. It's one of the governing bodies are basically saying that, you know, we're not going to see that super cycle in oil, and oil, the run in oil is potentially done with. So I'd have to go along with that. I wouldn't want to go long oil off the back of a statement from such an important organization. But the trend is still up. So in my opinion, you're waiting for a break of 63.50, a break and a close, and maybe on the return of 63.50, you could start to trade it to the downside, and then take the majority off the table and see if it goes through. Or you see if it goes through and then try and trade it to the downside, or you just all out wait for the long. When you actually see it coming down a bit further. I think oil is ultimately going higher, but I do think that this is probably a bit lofty for oil. So I think it could come down and test something down here, something around about the $60-$61 a barrel level. I think is probably likely.
That should please you, Dale, if you're in short at the moment. I hope that's the case. Come and join us in the room sometime. No drama. You can do that easily, I think, in the description below our little pictures of charts. You can join us in the room.
Yeah, there's your buy zone, though, Dale. You're in a buy zone right now. If you do want to take the short on, I think 65.20 would be a better area to try and get on the short with oil.
IEA. Let me guess.
Yeah.
Independent Energy Authority. Am I close?
Probably. Yeah, probably. I read the report. I didn't really read who they were, to be honest. But yeah, go and read it. I think it's the information's there and it's available. So yeah, go and check out what the IEA said about oil, and they were quite negative. So I think that might be enough to push us down a little bit lower.
Hey, Lewis, you were going to come on and show us your chart. Have you got it ready? We've only got a few minutes left. Sorry to leave it so late.
I don't think we have, mate.
We don't? We got to get out of here, haven't we?
Yeah, we should really probably get out of here.
All right, Lewis, save it to Monday, mate. Sorry.
Yeah, save it to Monday. Sorry, buddy. I think we are going to be tight on time if we start looking at another chart now. And Angel will be having kittens.
Don't do that, Angel. Although you'll be worth a few dollars if you do. So can we trade Angel having kittens?
Probably NFTs or something. I don't know. All right, let's get out of here anyway, mate. Have a great weekend, everybody. Stay safe in the market as always. Pick your levels and try and trade with no emotion, and I'm sure you'll be absolutely fine. Jeff, I will speak to you very shortly, buddy. Thanks very much, Angel.
Cheers, buddy. Have a good one, everyone. Have a great weekend. Catch you Monday. Bye bye for now.